the stock market has been falling mainly because interest rates are rising, 5% yield. And as you may know, bond prices are also going down, and they have an inverse correlation with the Treasury yield. And so this is dragging down the stock market. So in this video, we will analyze the unusual options activity data on bond prices, such as this IEF Bond ETF, to find out whether or not this will make a bounce or will it continue to drop, because knowing this will help us determine whether or not the stock market will also strengthen or will it continue to falter. So without further ado, let's get to this data on the bonds. All right, so this is one way we can use unusual options activity data to find out where the stock market is going, where bonds are going, and where Treasury yields, interest rates go. So let's get right to it. We're going to take a look at two bond ETFs. The first one is the IEF. This is the 7 to 10 year Treasury bond ETF. Okay. Now, we can see here that yesterday, October 20, Friday, the last trading day, we have these 91 strike calls, 7,700 of them, and we have these 92 strike calls and 93 strike calls. Right? We have these three sets of data currently trading at $89. So we can see here immediately that they are expecting that the price would approach this $91 level, or 92 or 93. And you can see that they were buying these call options for this price. Okay, when we take a look at the October 27th 91 strike price calls, that's next week. Let's make sure that this data is an opening trade. Okay, so here we have it. If you've been following this channel, you know that this is one way that we can use this data to determine whether or not something is very bullish, mildly bullish, or bearish, or moderately bearish. Lots of signals that we can use and tell from this analysis. Okay, so we are also in this position. You can see here that the volume total of 9,000, much greater than the open interest of 64. So we know these are opening trades. So we know they are buying these 91 strike calls. And when you analyze the trade, you can see that this is expecting the price of this ETF to go up so that it becomes profit. This is the profit loss diagram you can see here. Okay. And we can see for these other ones, 92 strike calls, 93. This is December 15. Let's check to see if these are opening or closing trades. So here we have it. The 92 and the 93 are over here. However, notice that the open interest here for the 92 is 5,000, for 93 is 2,000. So these are not as clear when we analyze this data, because they could be closing these trades. They could be buying these calls to close rather than buying them to open. And by buying them to close, that is not as bullish as buying them to open. It still tells us something when we analyze the data, but it tells us a different level of sentiment here. Okay, so that's something to keep in mind when you take a look and use data for your analyses. All right, so let's take a look at another very popular ETF, the TLT. Okay, this is the 20-year, okay, bond ETF treasuries. Okay, so when we take a look at this, the most significant and unusual one we see here is actually not the one here that is at 19,000, because these are selling calls, and that does not necessarily mean that they are very bearish. Okay, so it is a very closer to a neutral, mildly bullish strategy. Okay, so it's not so clear and strong with that type of data, because as you know, if you trade options, you can sell calls if you have underlying shares, and that's known as a covered call strategy. Okay, so that's essentially trying to take advantage of the volatility to collect premium. So what we want to focus on is these 10,000 unusual options here. These were done by the same trader. You can see that the time was done at the same time at 10:12:41 second mark. Okay, so this is for the March 2024's 75 strike puts, 90 strike calls, and 97 strike calls. Okay, so what is going on here? Let's take a look. March 2024. So we see the 75 strike puts. We can see that the open interest is less than 10,000 on the volume side. We know these are also opening trades. And over here, on the 90 strike calls, there is 15,000 open interest. So it's actually greater than the 10,000. So these could be closing trades. Okay. And for the 97 strike calls, we have an open interest of 3,900. So these are opening trades because this is less than 10,000 for the volume. All right. So what is going on here? Based on our analysis, we believe that there is a higher probability that they are buying the 90 strike calls to open and selling the 97 strike call to open, and also selling the 75 strike puts to open. And when you analyze this trade, this is what it looks like. Here it is. So notice here, this is where the TLT price level currently is at. The x-axis here is the share price. Okay, this is on the y-axis here is the profit loss. Anything below this is a loss. Anything above is a profit. So this is the curve we're looking at here. And so as we move on the mouse, we can see it's either a profit if it goes down or loss. This is a loss because it's negative, and this is a profit as it goes up, right? So this tells us that this trader is bullish. However, they are also protecting themselves in case the bonds continue to drop all the way down to 75, this area here. This is their break even here, actually. So you can see that at expiration, they're not actually going to be losing anything. You could see that the blue line, that's just the expiration time, is actually not below 0 all the way up to 75 here, right? If we change that date, you can see that on March 16, 2024 would be the expiration of these options, and all the way to here, it's still $26 of profit they could collect, right? Only unless it drops below 75 in share price, then they would start to have a loss. So they've created essentially a hedge on the downside here. And also they are able to profit if the TLT goes up. In the near term, it would be profitable, but in the long term, they would actually have to break the $90 here, you can see here, to be profitable, right? When I'm saying short term, because you could see that the purple line is actually the short term dated line for it's actually profitable, right? This is showing the purple profit line, right? This profit is from the purple line. This is short term. So in the short term, this trader believes this TLT will increase and bounce from its current low. Okay, so that's what we can tell from here. You can see that we are at a very low for the TLT. And speaking of this trader, we know that they sold the 75 strike puts, and we know they did 10,000. So what does that mean? Selling the 75 strike puts essentially means they're willing to own 100 shares of TLT if it drops below that price. So it required $7,500 of buying power, of capital, to put on this trade. And since they did 10,000 contracts, you have to multiply by the number of option contracts. And so this trade was $75 million. So this trader, a wealthy, rich investor, did this trade. And so based on this data and the value of these trades, we think also that the bonds will make a short-term bounce at some point before the end of the year here, especially before March when these options expire. Okay, so that is what we believe based on the analysis of unusual options activity data. Comment below on what you think will happen. Obviously, this depends a lot on the interest rates, whether or not they continue to go up, or will it come back down. And then this will then affect where the stock market goes as well. So comment below on what you think will happen to bonds. Will they make a recovery, a short-term bounce, or not? Let us know in the comments below. If you're interested in this type of data analysis that we do, check out our other videos. If you're interested in new stock picks that we use to beat the market, to find out where those wealthy traders are doing, consider joining our membership by clicking the join button on our channel homepage, where we share exclusive videos to our members only on the data when we detect where and which stocks the wealthy, rich investors are trading. And then we trade using option strategies based on the directional bias that they have, whether the stock will be going up, going long, or down, and we would short it. And so you can use stocks or you can use options to trade on either direction. And if you only use stocks, you can also short stocks or go long on stocks as well. So that helps us diversify our portfolio, helps us pick the right stocks in this type of uncertain market environment to outperform the market. And so if you've been following this channel, you know that the majority of our stock picks are winners. And if you are one of our members, you know for sure because you have access to our member picks. All right. So as usual, please smash that like button. It really helps us make more videos to share this deep insight with everyone. And wish everybody a wonderful weekend. Take care and good luck in the markets.